Welcome back to my channel. In this video, we are going to be looking at Carvana. Now, Carvana was one of the meme stocks everybody was talking about. Carvana's going to come along and sell you cars online, revolutionize the auto industry, which is basically what every piece of crap hype stock says they're going to do is, they're not a car company, they're a technology company, or they're a disruption company. The buzzwords abound in a bull market. But if we look at Carvana, in this massive run-up, pretty standard for when you enter into a bull market like we were in 2020, and the drop-off in its trading lower than it was in 2019. Now, a lot of people want to say, oh, dude, but it just became cheaper, so buy the dip. Now, you don't want to buy the dip with a company like this. And let's get into it. So, basically, what I'm telling you here is that over the past 5 years, there was no point in which you bought Carvana that you are actually making a good purchase. So let me just tell you that right now, if you own Carvana stock and you saw it run up like it did, and you're sitting there telling yourself, yo, I'm a genius, bro. Carvana ran up and now it's down and I don't understand why. Well, at no point did you pick this company up for a good price. I mean, at minimum, or at right now, you're buying it at 13 times book value, if you're buying it. Okay? But, I mean, it gets even worse. Company's not producing cash flows. I mean, you come down and you look at, it's had 1 year of positive return on its invested capital. Yeah, I mean, what do I think? I think this company is going to go bankrupt. I don't know when, but I mean, you have increasing revenue, but I mean, again, when we're headed into a high raising interest rate environment, remember what a company does. You have to ask yourself questions. Like, what does this company do? Carvana is a company that sells cars online, basically. Yeah, I mean, I don't know. I mean, this might be just a short video because I really don't know what to say more about this company. I mean, we could try and sit here and figure out when it's going to go bankrupt, but I mean, its liabilities, its total liabilities are almost as great as its total assets. Why do I use that? I just use that as a quick reference that I can look at because you have 10,000 stocks in the world, right? So you want the quickest method that you can find of eliminating a stock, because that's really what it's about. One of the things I use is total liabilities greater than total assets? If it is, I'm probably not interested in the company. Okay? That's me. You might have a little bit different method because there's going to be times, I'll just tell you this now, there's going to be times where liabilities are greater than assets, but the company is going to turn it around because of investing. I would just rather, instead of trying to guess if the company is going to turn around, wait and see. Again, that's me, but that's generally a red flag for me, a no-go area. Obviously, the other no-go area for me would be just simply this. It's not producing cash flows. Free cash flow per share is negative 18.24 if you trust stockanalysis.com. And I will tell you this, check multiple sources because I've found mistakes in this software. I mean, they were relatively minor mistakes, but again, mistakes do happen. So, I mean, you have no cash flows, right? It looks like, your income, when your revenue when the revenue goes up like this in this year, take that with a grain of salt. When it jumps like that, I mean, this company is small enough that that's really not a red flag. But I mean, they're still trading. What are they still trading? 3 times shareholder equity. Yeah, you don't. Generally, I would say stay within 1.5 of shareholder equity. That comes from Benjamin Graham's book, The Intelligent Investor. But yeah, I mean, I don't really know what more needs to be said about this company. Look at his market cap at that point versus now. But okay, it's trading 10 times. All right, never mind. But looking in the wrong area. But yeah, I mean, I really don't know what more needs to be said about Carvana. Would I even consider this stock? I mean, you tell me if you think this is a good buy, because I personally wouldn't touch this with a trucker's balls in Jeremy's face. So, anyways, if you thought this video gave you some value, like and subscribe. If you didn't, don't. Thanks for watching, and I'm out.